G'day guys, Sam here from Positive Real Estate. I want to welcome you to the Friday email. I'm going to teach you some tips and strategies about what's happening in the market at the moment, the sentiment of the market, but of course for the best tips and strategies on where to invest, what to know in the real estate market and what strategies are out there when it comes to buying real estate. I encourage you to go to one of our property information nights. They're held all around the country, every capital city. You can get involved and just come along obligation free and just learn some great tips and strategies. Take some good notes. So take some notes today because I'm going to teach you a little bit about what's happening in the market right now. If you pick up a newspaper, and depending on what newspaper you pick up, some will say the real estate market's surging forward and everyone should invest, and from a wealth creation point of view, real estate and shares as well are some great opportunities for people to make some money for the future. If you pick up another newspaper, it'll be doom and gloom and real estate values are going to go backwards and plummet and things like this. To be honest with you, it's all a bunch of nonsense. Right now the economy is very strong and I'll explain why through this section. But I want to touch on the sentiment of the market first. The market lives, it breathes, it's made up of human beings really, and we all are quite emotional creatures. And so what happens is during a real estate market, it tends to have a bit of a sentiment. At the top, we have excitement, and most people buy in an excited market. They actually like hearing that house prices are growing. They like hearing that markets have grown and just done 20% years, and they tend to buy when a market is excited. In reality, it's probably not the best time to buy. The best time to buy is what we call a buyer's market, and that's when the market goes through, and the bottom of that cycle is known as capitulation. The market just gives up and there's great opportunities to buy. Right now in Australia, in most parts of Australia, we're somewhere between the two. So it's a great time for buyers to still pick up a pretty good bargain. The economy's strong, we've got a huge commodities boom, and if you invest in the right areas you can actually leverage off that huge infrastructure. Australia's the world's quarry, and we've got some great underlying fundamentals from that market. Dwelling approvals are down this year, down by 5%, so it's got an immediate effect on supply and demand. Wage growth is up, and in fact, it's not a bad idea for you guys right now to consider asking for a wage increase on your own personal income, because one of the best ways to control more real estate is, of course, to have more income in your back pocket. Debt ratios are down in Australia, household debt ratios. So right now, we own more of our own home because people are saving more. Savings are up, so the economy's pretty strong. Our dollar's doing really well, and so that's allowing for better imports at a better price. The arbitrage for importing stuff is very good right now. Rates are not going to blow out at the diff. In fact, I believe in 2012 rates will even come down. If we do have one more rate increase, it'll be 0.25%, be in the latter quarter of this year. So there's not too much to worry about. In fact, I believe we're going through right now a rental boom. And when you come along to the information nights, I'll explain that right now we may be sort of around here in a lot of the markets, some of the more emerging markets on where to invest. And we can pick up rental returns of 6.5%. But because the wages are going up in these areas, and you're linking it to the business opportunities in those areas, we've got a great opportunity to extrapolate more rent out of the people renting in those markets. So they're already paying 6.5% in some good capital cities like Sydney, and their wages are about to go up. And the debt in those houses has gone down. They're saving more. So now they're saving, let's ask them to pay more rent. So if you can imagine, we're on a 6.5% return. Is that a normal return? No, it's not. The average return around Australia is 4%. Okay, so you're getting a great return already. Now all of a sudden those people are making more money. In a year or so, that return will be up to 7%. I believe in 2 years, that return will be up to 7.5%. Will investors like to buy on a 7.5% return? Yes, definitely. So you will see, first, over the next year or 18 months, you're going to see some rental growth, followed by another property growth spurt in good marketplaces. But to find out the best marketplaces to buy in, you need to come to our property information nights, because it's pretty hard to just throw a blank canvas over the whole of Australia and assume you're going to make money buying anywhere. It doesn't work like that. You need to work out where you can time to get good rental returns to make some capital growth. There's an old saying in real estate, growth follows rental returns. So I urge you to link the two together. And if you came to a property information night, I'd show you where that is possible. So there's been some great returns in the market of late, and one thing I want to touch on is what the media is portraying is that the market is actually low growing. That is not true. The bottom end of the market is growing well in Australia. In fact, the statistics are quite skewed, because if you look at the high end of the real estate market, it's actually plateauing or sliding or even troughing. Okay, I just recently read a $10 million house, $10 million house sold for $5 million. Okay, so it lost 50% of its value. $5 million. Do we shop in the $10 million range? No. Does the average person buy $10 million properties? No. Okay, so properties in that value or in that high-end bracket, money becomes almost irrelevant to the people getting involved. They've got so much money. So if we had a $10 million or a $5 million loss, and then we look at a $200,000 property, and today I can get you $200,000 properties in Sydney. People believe that's hard, but I can find you a great return in Sydney, and with a bit of add value techniques, I can push the rental returns up to 9%. Come along to an information night and I'll show you how. $200,000 investment with about $50,000 worth of upgrades. I can take the rental returns on a $250,000 all-up investment to well over $465 a week. So we've made a $5 million loss on the high end of the market. Now the bottom end of the market, the $200,000 property, it actually grew by 10%. And so we made $20,000. Okay, $20,000. There's an article in the Fin Review today. I'd urge you to get the paper, and you'll see exactly what Residex is talking about when it comes to this statistic. In fact, for investors, it would be great if they just got rid of this high-end market. Because what's happening, we're making a $5 million loss on our high-end properties, but a $20,000 gain on our low-end properties. So what does that do to capital growth statistics? Well, it doesn't make them look too good. In fact, on the maths, we would need some, 300 properties to sell in the bottom end of the market to make up the loss in the top end of the market. Okay, and it doesn't work like that. So right now you're going to hear some information in the newspaper, in the media, that house price will be low growing. It's not necessarily true. The bottom end of the market will always grow because you're buying at the bottom and there's pretty much nowhere for it to go. It's at the floor, so it's going to go up. But the top end of the market will skew the figures. But anyway, for more information on what to do, where to invest, what to buy and how to make some money this year, I'd encourage you, jump on board, come to one of our property information nights. I'm always there, and we've got a big, in-depth team all around the country to service your needs. Talk to you soon.